Thank you very much, Professor Krugman, for a very well-rounded perspective spanning a century and several paradigms. Let me start where you ended, populism and protectionism. We, and I'm sure many of us here, are more worried about that part. Prime Minister Modi raised that as one of the dangers in Davos when he spoke about terror, climate, and protectionism as the three dangers. Now, going back to the United States itself, the US deficit with China is as high as $375 billion. And President Trump is already talking about imposing tariffs on another $60 billion of Chinese imports. How do you see this panning out? Will there be retaliation? Will that bring down global growth? Is it going to look really terrible in a year or so?
Okay. So the political economy of protectionism, first of all, just will this happen? Are we actually going to see a trade war? Are we going to see widespread imposition of tariffs? Until about 2 weeks ago, I was, in fact, quite optimistic that it would not happen. And the reason was not because the president would get good economic advice, but because U.S. business is so thoroughly invested in a globalized economy. These value chains where a product is produced in many places are pervasive. All of the investments that business has made for the past 20 years were based upon the assumption that an open trading system would continue. And so there's an enormous amount of physical capital, of past investments that are at risk. There's actually a large number of jobs. People complain about it, but in fact, there are an awful lot of jobs in the United States and in Europe which are in plants whose existence depends upon the continuation of these value chains. Now, the problem is, I had assumed that the influence of the business community would be sufficient that whatever the protectionist inclinations of Donald Trump, that it wouldn't happen. I'm a lot less convinced right now. We've just seen his reasonably sensible National Economic Council head fired. We've just seen a completely irrational set of tariffs imposed on steel and aluminum. So I still think that probably we step back from the brink, but the risks are certainly up to now, 25 or 30% that we will see a really disruptive global trade war.
You would expect Chinese retaliation. So, how serious can it get and how quickly?
Things can move. By the standards of internet time, they don't move that quickly, but we could be talking about over the course of a few months. The most immediate issue, I think, is going to be actually confrontation not with China but with Europe, because the steel tariffs are going to hit the Europeans, and the European Union, whatever else its limitations, operates as collectively on trade, and it's just as big as the United States. So there will be widespread retaliation against U.S. products if this goes through. And in the case of China, now you might say, well, China runs this huge surplus with the United States. How much retaliation can the Chinese do? But here's where the complexity of the global value chain comes in. The U.S. runs a large bilateral deficit with China, but much of the value of those products is actually not Chinese. It's actually from other places, including Japan. And so the possibility of a souring of relations on trade, not just with China, but with the whole of Asia, becomes very large. So no, we could get, you can easily tell a story where a series of tit-for-tat, not just retaliation, but as friends of mine used to say, the biggest danger is not retaliation, but emulation. If the United States doesn't play by the rules, who else will? And so that could be a really big deal.
Well, what about the U.S. Federal Reserve? There is a huge fiscal deficit that will come probably because of the cut in taxes and the expenditure. And at the same time, if you have problems of tariffs, that also increases the cost to the economy or inflation. So should we expect very quick increases in Federal Reserve rates? And if that happens, what happens to countries like India? Will there be a problem of financial dislocation? Okay, India is less exposed than most. But yes, I mean, I think we are looking at faster Fed rate hikes than previously anticipated. This tax cut is as an economic stimulus, it's very badly designed, but it still increases the deficit quite a lot. If we have tariffs, that also is inflationary. Probably not exactly expansionary, but anyway, it's and the Fed. There's been a noticeable shift in tone from the Fed. I've been, we look a lot. I follow. Insider tip: follow Lael Brainerd, who is probably the most dovish member of the board, and also one of my students, by the way. But anyway, but she is sounding much more hawkish right now, and that's an indication that I think the Fed is heading for higher rates. Now, India is not heavily exposed with large dollar debts. Some other emerging nations could be really quite badly hit. Well, I will try and take questions from the audience. So the mics will come to you. Let me just fit in one more question before the mics go, please, to this table. Professor, what about China itself? I mean, Xi Jinping has just gotten himself elected probably for life. How do you see Chinese instability panning out? Yeah. By the way, this is a huge disappointment for global optimists. I mean, one thing that we had hoped was that economic progress and gradual democratization would go hand in hand worldwide. That we would be seeing, no one expected China to turn into India politically overnight, but we were hoping that it would move forward, and instead it's moving backwards to strongman rule. Now, China, I would say that China is a financial crisis waiting to happen. Trouble is, I've been saying that for about 7 years. So, but that doesn't mean it isn't still true. China is a wildly unbalanced economy with still investment of almost 50% of GDP, sharply diminishing returns to investment, not enough consumption demand to justify the investment, unable, even with all that, to generate the kind of growth rates that would justify the investment. And what they've been doing is they've been sustaining it with a credit bubble. And you keep on thinking that one of these days it's going to crash. It keeps not happening, but we do have something we call Dornbusch's law after one of my old teachers, which is that the crisis takes longer to happen than you could possibly imagine, and then when it comes, it happens faster than you can possibly imagine. So I do think that there's a significant risk of a Chinese bubble burst, and having a government which is strongman rule, lack of deep-seated political legitimacy is not something you want at a time like that. Oh, well, there's Navneet Munot over there. He manages several trillion rupees of funds from the State Bank of India's mutual fund. Go ahead, Navneet.
Hi, Paul.
If you can stand up, please.
We are all concerned about the reversal in the trend of globalization, but can it lead to another globalization, which is the globalization of localization? Everybody tries to produce locally, which leads to higher investment, reduces income inequality, and also lower environmental footprint.
Okay. So the answer there is, I mean, the possibility of a trend towards localization is real. I mean, that has happened before. That happened in the interwar years. It happened in developing countries after they gained independence after World War II. It didn't work very well. It was a failed strategy of economic development. In terms of environmental footprint, look, the shipping of goods is not a major source of greenhouse gases. It's some, but the overwhelmingly most important source of greenhouse gases is coal-fired power plants. And after that, it's personal transportation. It's cars and trucks, and this is not really an important. This is not where you would want to go if you're worried about the planet. And income inequality it just won't make that much difference. I mean, back of the envelope, I've asked what would happen if the United States got into a trade war and that basically just shut down and we eliminated our trade deficit completely. We used to have 35% of the workforce in manufacturing. We now have only a little bit over 8% in manufacturing. Suppose we did all of that, how much manufacturing will we get back? And the answer is we would still be under 10% of the workforce in manufacturing. The sources of the big changes in income distribution are not primarily globalization. They are technology, they're changes in political institutions. This is not a solution you should be looking for. Oh, and the impact on some countries. Try to imagine what would happen to Bangladesh if the possibility of apparel exports, which is really what keeps that economy afloat, was cut off. We would be talking about Malthusian crisis. So this would be a terrible thing if it happens to the world.
Oh, well, I think we have time for only one more question, and since the mic is already there.
Yeah, Professor Paul.
If you can introduce yourself as well.
Dr. Sarjeet Dudeja. Professor Paul, can you share your perception about the mind of President Trump? For last so many years, he has been very rhetoric, and now he has changed to have a friendly relation with North Korea. Is it a economic or political or social compulsion because China and Russia is taking support to this North Korea? How things are moving that way?
Oh my. Gosh, I thought by coming here I could get away from Donald Trump, at least for a little bit. No, I mean, the trouble is that, as it turns out, we happen to have someone in the White House who is not at all given to, he doesn't take the job seriously. He doesn't say to himself, I am the most important official in the world. I had better do my homework, try to understand the issues, try to pick the best people. He just goes with, these are my gut feelings. I'm going to hire people who make me feel good. That is a pretty frightening prospect. And certainly on these economic, well, both on the fact that of nuclear weapons, that I don't even want to think about that. But on the economic issues, not only is it, his gut feelings are protectionist, but he has an image of the way things that should be, which is about 50 years out of date. He wants America to be a heavy industrial country in the way it was when he was a young man. And that is just not going to happen. But the attempts to make it happen can be extremely destructive to America and to the world as a whole.
Professor Krugman, we're completely out of time. I know there are questions, but the next speaker is waiting. Thank you very much, Professor Krugman. 2 gems I take away from this conversation. You don't get to Denmark levels with Chinese levels of corruption. There's a lesson for all of us there. And the other gem, President Trump is not taking his job seriously. That's interesting. Thank you very much, Professor Krugman.